Good day, all. Ira Epstein with your financial market wrap-up. And this is for Wednesday, the 18th of December, 2019 at 3:15 p.m. Central Time. This is where you're going to see the settlement in the stock indices. Not an awful lot of movement, but again, some of them making new highs and certainly new all-time highs for closes. You stalled a little bit in the Dow. Okay, gold is stalled back a little too, down right now about $1.60 with silver a little lower as the dollar picked up some bid. Remember, today's going to be the day that we get the vote by the House of Representatives on impeachment of President Trump. The only thing that I would think that could surprise the market is if the vote doesn't vote to impeach him. I am not saying that won't be the case. I've given you the idea of the surprise. Tomorrow we start getting more economic data. The market will be through with that phase of the impeachment, so the traders will not the rest of this year. By the way, there's only about 9-10 days left of the year, if you think about it. Trading days less than that. And they'll worry about that with what the Senate's going to do come January. Right now, they'll be through that event. It's gone. Lindsey Graham said no witnesses, and by the president or by Chuck Schumer calling for them. Interesting. Remember, he is the chair of the Senate Judiciary Committee, so he carries a lot of sway. Maybe one and done. In other words, you won in the House and you're done in the Senate. I don't know. What I do look at is the market is stable in the energy market. We tomorrow get the EIA number, and they are looking for a bit of a bearish number in the natural gas storage because weather has been somewhat mild. And I realize you're going to say if you're out east, that Ira, you don't know what you're saying. It's the country as a whole, and it's been on the mild side. Grain's a little bit of a correction. We keep building on interest rates. 10-year notes up to 192, so it's a pretty big number. As we take a look on the chart of just closes, we're up 23 points. This is for the week so far. This is still Wednesday. For the week so far, this is an all-time high close. When we come to the daily chart, you can see how the market has just sort of stalled itself out there. But that is not the sign that the market has yet ended the trend. You still have the pattern of higher lows, higher highs. The market is over the 18-day average of closes, which is over the 100-day, which is over the 200. So it's the bull market that plain hasn't ended. So where's the resistance coming from that the market ran up there and sort of stalled? It's the Bollinger Band. The market did have, if we take a look at this, you were over the Bollinger Band. I believe yesterday you were under it by a fraction. Day before you were over it. It's just back and forth. Here you were back over the band. And on this day, you had 3 days in a row where you were over it. You started yesterday coming back under it, and today you're just playing on either side of it. That's what you've got. More important to me is that the momentum has shifted, and it's now what we call embedded. It's locked in, which tells me that on breaks, I should be aggressively looking to see where the buyers are going to show up, not the sellers up here. When the red line turns under 80, I'll have a different opinion. Until this red line does that, I think the buyers will show up somewhere between the 18-day average and this gap that you have right there. What about the Nasdaq? Well, if we look, one day where both numbers are over 80, yesterday and the day before. You have your embedded reading. So even though the market is pulled back to the right-hand side of the Bollinger Band, which is totally normal, it's still saying on pullbacks, expect to see the buyers until that red line closes back under 80. The Dow is just overbought. And it's funny, it's the market that was down today, but it's still in an uptrend. It ran into its resistance, and you can see this pretty crystal clear, actually. When it got up to the Bollinger Band, your sideways action hit it and just sort of stalled on you a bit. That does not mean the trend is end. Now, in this market, if you take out yesterday's low of 28, what is that low? Let's get it exactly so I'm not guessing for you. 28,181. Well, that could be a sign the market wants to pull back a little towards that 18-day average. Would not surprise me. Would that be out and out bearish? No, and here's the reason why. As long as you still settle over the 18-day average, the bias is up. Are we overbought? Yes. This market is different than the other two I showed you, and even the Russell's got its embedded reading. So until the embedded reading is lost in these 3 or 4 indices that we're talking about, I think the pros will show up buying them and not rely as much on the chart pattern as on the momentum in the slow stochastic. In the VIX, we've been getting a bounce in an oversold area. I haven't changed my opinion. I still think that if you were to hit that lower Bollinger Band, you would get put writers showing up looking for a rally back towards the closest average, which would be the 18 at this point. In the bond market, we're getting a bit rich in price. We're oversold. We keep finding support against the lower Bollinger Band. The trend is admittedly down, but in a very oversold condition. Same in the 10-year note, oversold, had a bounce away from the band, right back down to it, still definitely an oversold condition. Same in TLT. Does that mean you can't go lower? No. But do I think that new money's going to come in aggressive on the downside? I don't think that either right here. I think as we get to the end of the year wrap-up, in oversold conditions, they beg sometimes corrections. In the dollar index, it's trying to correct to the upside from an oversold reading. The market is still oversold, as the readings here, one of them still under the 30 level. You got to get both numbers back over 30 when you're oversold to no longer have that going on. I see pretty strong resistance between the 18-day average in red of 97.21 up to 97.37.5. In the eurocurrency, I see a correction taking place finally, where the market is starting to fall back with lower highs, lower lows. I think you'd agree the 100-day average acting as something of a buffer. If it lets go, then the 18-day average is the next buffer. But more important, you're correcting an overbought condition. We're starting to also hear a lot of the different ministers, if you will, that make up the European Union, starting to offer ideas to Ms. Lagarde on that one-year review of monetary policy for the European Union. Some are asking, have negative interest rates really been that good? Talking about negative interest rates, the Bund, which had a big negative rate, it's only a negative 0.2 at the end. So it's starting to get a year-end bounce. It's still negative. British pound. We talked about losing an embedded reading. You lost it here on Monday. That often, if you don't re-embed the very next day, which means get a move where this turns both numbers back over 80, often, not always, often, it leads to price making a run to the 18-day average. Now, it gets close to it most of the time. Does it have to hit it every time? No, but close is close. Yesterday, it made that break, so I was getting satisfied. Look what it did today. I mean, you talk literally getting right down there and just stopping. That's what occurred. So I see a neutral market right now in the British pound. Japanese yen is still bearish, but very oversold in the reading. Lower highs, lower lows, certainly paying attention to the lower Bollinger Band and in a downtrend. In Bitcoin, you got down to the lower Bollinger Band yesterday, not Monday, yesterday, first challenge. What do I say on the first challenge? You normally see the pros take some money off the table. Big reversal day today, made a lower low admittedly. What number did it go back to and stall out? If you can't see that, it's pretty close to that 18-day average. The differential between Brent and WTI just hanging here at the $5 range. You know, this is the number that the IEA was talking about that we'd probably see the differential hang at, and they had said this months ago, and they have been pretty accurate on what they have said. In looking at the Brent, it's still in an uptrend. It still has the embedded reading. It hits the upper Bollinger Band, backs away from it, and continues on its assault up. We saw today the EIA numbers come out, and they did not meet what the trade was looking for, but they also were nowhere near as bearish as the API numbers yesterday, which showed a net 14 million barrel build. Today's net was closer to like 2 million barrel build, so nowhere near it, and I think that's what's supporting WTI and some of the other markets. I'm also looking here at embedded readings. One last thing. We are still in America producing like there's no tomorrow energy. I was just looking at the numbers before the show. We're still near, I think we're within 100,000 barrels a day of record highs from last month. So we are, even with the fewer rigs that had been at work there, we're still humming around. And as prices go up in the WTI, do you think we're shutting down production? I don't. I think that higher prices beget higher production. When I look at the gasoline, still very much in an uptrend, very overbought, but higher lows, higher highs, outside day up today. So what don't you want to see? You don't want to see today's low taken out. If you do, it calls for a possible retracement to the 18-day average, but more than that, it breaks the chart pattern that's been bullish. Assuming the market can run for any reason to the upside, well, the 172 area. A lot of people going to be driving right now, as you know, for Christmas holiday, so you're getting your demand in there. In terms of nat gas, I still see supplies as way, way too big. Yes, we go to new lows, we get bounces, but I see nothing fundamental to change the market. And in the chart action, while the swing line is up, prices stay consistently under this 100-day and 18-day average. Very bearish situation. You're getting a bounce to get the market away from being oversold. 29.55 today. Unless you break hard tomorrow, you won't be oversold anymore, the way the math works on that. So I put it all together. We'll see where it's going to carry us. But one of the things I want to remind you about is, as an indicator, a lot of people don't understand how to use the Aroon indicator. It's now starting to show up in more ads that I'm seeing than ever before. And the reason is, what this indicator does is, if you learn how to use it, it gives you an idea if a trend is holding, because it looks at a price and time relationship. If you're going up, it wants to see these higher highs stay. They don't want to see the market reverse. And you get crossovers of the Aroon that sometimes tell you before the indicator that you're using works that, hey, this market's internally weakening or it's getting stronger as this is going on. To find out about it, I put a video series together. Simply go to our website. Under free offers, sign up for it. We'll send you the links for it. It's pretty easy to see. You can click up here if you want to get that as well. If you're watching me on YouTube, it'll take you right to that sign-up page. I'm Ira Epstein. You have a great day, and I'll see you all tomorrow.